Well, that's the next item on the agenda today. And of course, as you can see, Bukar Kyari joins us this morning, former chairman of NESG. Thanks for joining us this morning, Mr. Kyari. Well, the Senate has since passed this revised 2022-2024 MTEF. The House of Representatives has also received the same, and we understand that the president is going to be delivering the budget speech this afternoon. But perhaps by way of a review, from your perspective of previous MTEFs and this one, how well or how significantly has the MTEFs affected the economy, and what are your hopes for this one?
Good morning. The MTEF is part of the Fiscal Responsibility Act, determines basically what one could consider the medium-term, meaning short to medium-term strategy paper on the budget and especially expenditure, because the E in MTEF is the expenditure aspect of the budget. Now, it was initially at 13 point something, 13.4 or 13.8 trillion naira. But I understand that yesterday it had been bumped up to about 16.45 trillion, meaning that would be the expenditure for 2022. Now, there hasn't been any significant change in the revenue aspect of that plan, of that framework. And I believe that the revenue still was kept at the 8.76. But we'd have to wait for a few more hours to listen to Mr. President's budget presentation to actually make a sense of it. But one thing is certain, from the posture of these documents, it looks like another year of deficit financing. And the deficit may even widen, because if the numbers were to be raised from 13 to 16, then obviously another nearly 3 trillion naira would be added to the deficit that initially was around 5 trillion or so. So we may see a situation where the deficits aspect of the budget may go up to 7 or 8 trillion naira.
But, you know, I mean, one other thing that is definite is that the bill is increasing. Budget deficit is already increasing, and from the front pages of the papers here this morning, going by the decision of FEC yesterday, we'll definitely have to borrow something in the region of 6-point-something trillion to fund the budget. And at a time when a significant chunk of our budget goes into debt servicing, how is that going to help our production? Because we also hear from you economists that unless we are producing, we can't do any better.
Certainly. One has to go back to the drawing board in terms of what one needs to do for the economy to become productive. And it is that productivity that would generate the necessary revenue or potential revenues for government. That's one. The second is naturally with an increasing productivity, it means that there would be more economic activity. Initially, one can do that, right? But when I look at this MTEF, the MTEF, this is the budget, that the allocations to the various pockets, if you will, are different, because capital spending was put at 3.6 trillion. Now, capital being the expenditure being the necessary ingredient for the future is dwindling in number or even as a percentage of the budget, which is basically means that the positive thing that had been mentioned in the document about the capital expenditure is that government may ensure that projects that had been started in prior times or last year or this year would be completed. I think that's a commendable statement or desire. Now, those elements are fine, but when we see that the debt service itself is inching up as a percentage of revenue, because if the debt service exceeds 6 trillion, and your mate would bet you that by the 2022, it might even go as close to 7 or 8 trillion naira. Now, that in a situation where, of course, deficit increase does not necessarily mean that the debt service will increase percentage. It would be a smaller inching up depending on the rates of interest those debts would be, those monies would be borrowed at. But the key thing is that we are in a situation where we are in a hole, and we continue to dig. And the saving grace obviously has to be look at what we need to do to ensure that we collect more taxes, we become more productive. And realities also need to come in. But I think many analysts are indicating that it is time for federal government to sell some of the dead assets. They're probably somewhere in the neighborhood of 500 that the government can use to recapitalize, so to speak.
Businesses here have got to thrive. So could you give us the practical implication of this, how it's going to play out in both the private and public sector in the country?
The businesses need to study the budget and the budget posture and the strategy of the budget. And I would encourage businesses to look at what the outcome is going to look. Some of the assumptions may or may not come to pass. Oil production on a daily basis, those numbers.
Because pardon me, I was going to say, how much are they going to have access
today?
Sorry, just to put this as well, as you explained, are they going to have access to finance, and how? That's what I mean by how will this play out for them?
Yes. Well, some of the larger corporates are issuing their own bonds, but the smaller companies, actually the backbone of the economy, will have difficulty borrowing. Mind you, as the FX situation exacerbates and the economy is not picking up at a rate that was expected post-pandemic, or as the crisis related to COVID is, that thereby banks can start to lend. But I don't see that happening fairly soon. And that basically means that credit availability will become extremely difficult. Of course, the banks are also going to study the economic environment and would have to pick and choose who and what areas to lend, to which clients and what sectors, and they're going to lend in. All of those risks have to be looked at, studied before anybody gives out loans. So yes, the situation as is quite difficult, but if there is, and of course we'll also have to see the response of the Monetary Policy Committee. Maybe at the next level there might be easing, but I don't see that happening because liquidity is still being sucked out of the economy. So what we are going to see for the private businesses is that, it's going to be a very difficult situation when it comes to availability of financing. The second is that some of the businesses, or many of the businesses depend on importation. And the lack of availability of FX is also a contributor to the difficult businesses encounter. So it is not necessarily just the budget element, but it is also the situation we have found ourselves with FX availability. I wish that the productivity in terms of people producing and exporting were to inch up. And if that were the case, then the pressure on the Naira would be less or lesser.
All of these that you have painted only seem to spell extremely hard times for the micro, small, and medium enterprises. You've talked about the difficulty of getting access to funding, and you've also talked about the fact that we are largely import dependent. You've also mentioned the difficulty of getting forex. Most of the micro, small, and medium enterprises, let's say maybe something in the region of 50 to 60% of them source funding personally. So at a time when they are finding it difficult to raise personal funds, and the people that they could have relied on, friends, family, and all, that are having less and less spending power at this time, and of course, with the ease of doing business environments that we find ourselves in the country today, how then will government be able to generate the taxes and the revenues that they need to generate to balance things out, when in fact there are far less people within the tax net as opposed to the people who should be paying taxes?
In fact, you have done the analysis already. It's a difficult situation, because what we are going to see is that difficulty that the SMEs are facing. I mean, I know that for example, the central bank has intervention fund in the agri space in various segments of the economy. Now, I would imagine that some of these are lent out at reasonable rates. Now, those may give a bit of a breather, or what I would call subsidy, quote unquote, to that segment of. I also see a increasingly interesting segment or sector, which is the fintech and some of the startups getting investments. And most of those investments are, of course, naturally quoted in dollars, and majority are coming from outside of the shores of the country. Now, those are basically entities that are dressing themselves up. They're looking very good for the long term. They don't go to banks to borrow because they are startups. They don't have the balance sheet or track record to go to a bank and convince a bank to lend them money. So they are getting investments. Now, those investments give us two things, is that it could be inflow of FX into the economy. But the second thing, which is the hard breaking component, is that many of those early investors are not local. They're coming from outside. That means that if the fintech that started by a 25-year-old young person or young man or young woman, by the time it becomes $1 billion business, much of the income that would be generated by that, or dividends or whatever, would be accruing outside the country rather than inside. So I also encourage some of our businesses to create venture funds, in addition to even the government setting aside venture funds to invest in those promising aspects of the economy.
Well, a lot of this, I mean, we've talked largely about the responsibility of the federal government. We haven't even been able to mention the task that the states themselves have to play in all of this. But we have to leave that for another time. For now, we have to thank you very much. Bukar Kyari is former chairman NESG. Thank you so much for your time and thoughts this morning.